Hello and welcome to the FinTech Finance Virtual Arena. I'm your host, Douglas Mackenzie, and on today's episode, we're going to be looking at finance for the future, when banks can become brands. And I think it's a very exciting topic because it really speaks to the fact that we've had these institutions for hundreds of years, and only now are we going to see this next generation of them. And joining me here today are two gentlemen right at the heart of today's topic. First up, we have Rudiger Vogt from G&D or Giesecke and Devrient. Rudy, how are you doing here today?
All good, thank you very much, Doug.
Amazing. And well, Rudy, could you tell our audience a bit more about yourself and G&D, please?
Yeah, so as you said, my name is Rudiger Vogt, and I'm in charge of G&D's business with fintechs, neobanks, and payment processors. At G&D, we engineer trust to secure everyday life, payment, connectivity for identities and digital infrastructures. And G&D is a leading player in the paytech space, from physical payments to innovative, customer-focused digital payment and authentication solutions.
Absolutely amazing. And yeah, I think that's going to be a big paradigm in this new ecosystem is where we place our trust in financial institutions, because I think we're going to have differing views of why these institutions deserve our trust. So it's going to be very exciting to see your perspective, Rudiger, as we go in the conversation. And also joining us, we have Ramzi Eldabar from Algebra. Ramzi, how are you doing here today?
I'm very well, thanks.
Absolutely amazing. Oh, well, I'm doing absolutely great. Thank you so much. And Ramzi, could you tell our audience as well a bit more about yourself and Algebra, please?
Absolutely. My name is Ramzi Eldabar, as mentioned, and I work with Algebra in corporate development. I was part of the founding team here and have been involved in a bit of everything. What Algebra does, we are an inclusive and ethical fintech platform focused on enhancing inclusive financial practices and inclusive finance within the UK, and then looking to do that globally across emerging and frontier markets. We've built our own technology platform that will allow us to do that, integrating any of the exciting products and services that we would want to use to serve our customers in a more personalized manner that considers their needs, and then look to do that in different markets globally.
Well, it sounds like an absolutely exciting time to be a part of your guys' team, because not only is the ecosystem working its way into disseminating like you guys, but that scale sounds very exciting. So without further ado, guys, I think we've got to set the scene. We've got to understand why people choose a bank now in its current state. Banking as it is today, I'm going to throw it open to both of you. Do you think that your bank is still passed down through generations like an heirloom? Rudiger, maybe you come to you first.
Yeah, I think maybe for a certain part of the population, there's still this inertia, but I think it's much more of a conscious decision these days. As soon as a young person feels the need to become independent, also in financial matters. So when for the parents, it might have been important to have an ATM or a friendly clerk in a bank branch close by, their children look for best apps and services like BNPL or crypto trading. So it's a different set of needs actually there as well. And I was recently looking at a study by the Ascent where they asked 1,700 consumers what they want from a bank. And the top three answers, with more than 95% of the vote, were quality of customer service, low fees for accounts, and security and fraud protection features. So not a big surprise, probably the same answers like 10 years ago. But you would also find brand reputation, sustainability/environmental friendliness, and diversity in bank leadership among the top 10 with more than 70%. So my guess is that not all of the consumers interviewed had the same top 10 list. It actually shows the potential to differentiate if you pick your target group wisely as a financial institution and give your offering a clear focus.
Absolutely amazing, yeah. And I love this idea that banks are now not just going to be offering products, they're actually going to have a focus. They're going to have a laser pointed vision as to differentiate themselves. And Ramzi, if I could come to you and see your perspective of the current climate of where a customer gets drawn to for their first bank account, really.
Yeah, I agree with that. And I'd say there is still somewhat an extent of people still using banks as an heirloom and choosing what their parents have chosen. But there is a significant shift here. Even in the traditional context, people have always shifted for mortgages and for the meatier financial products, because those are the essence of why you choose your financial institution, and they make a significant difference. And then we've also seen, with the first wave of fintech, the Monzos, the Revoluts, the Starling, that's also started to create a shift of what people are expecting from their financial institution provider and their financial providers, whether that means using it as a secondary account or a primary account. And now, as we're going to discuss a little bit later on, we're entering into a second wave of fintech where these solutions are being increasingly more personalized to customers' needs, whether that's, as Rudy said, for security purposes, or whether it's for sustainability, or whether it's for certain lifestyle and values-based requirements and expectations that customers have.
Yeah. Now, with that in mind, then, why has it taken so long to get to this point? I mean, I know, Ramzi, you've mentioned that historically, if you go for a mortgage, you will shop around. But for your general bank brands that you associate with, your day-to-day expenses, why has it taken so long for banks to offer up these personalized products for their customers?
So there was a Deloitte study that I read as part of the work that I did with the Payments Association and MasterCard, producing a report on the evolution of fintech and the evolution of financial inclusion around lifestyle and values-based financial services, and lifestyle and values-based banking. And that report said there are 94% of banks are unable to deliver on the market potential for hyper-personalized products. And the reason for that is that the existing financial institutions they're slow-moving behemoths that have a lot of bureaucracy, large teams, and archaic technologies. And in order to develop that to this next evolution where you are providing these personalized products and services, it takes a lot to do it. And the technology doesn't exist, or it's much harder to do it at a later stage. Yeah. So what we're seeing and what we're expecting is that the fintechs to be driving this evolution, that they can be built from the ground up to have these principles at their heart, or to have these frameworks built in. For example, the way that we've done it is we've built our entire technology architecture from scratch that allows us to do whatever we want, and allow us to integrate any of the relevant APIs that would cater to the needs of our consumers, whether that means being data-centric, or whether that means providing and delivering the products and services that a customer might specifically want, whether that's around their specific, their faith, whether it's about their ethical concerns or their ESG concerns, or whether it's around any other part of their lifestyle more broadly. And that's also part of this, this prediction that customers who are surveyed, 86% of people surveyed predict that lifestyle solutions are going to be managing every aspect of their lives.
Wow.
In the next 5 years. And so for an existing financial institution to do that and shift its entire business model from something that's focused entirely around the finances is much more difficult than a technology provider that can partner with and connect with other players in the market, whether that's people like G&D or other people in the lifestyle space.
Yeah. Now, it's an exciting time to be in, but obviously those numbers don't lie. That is a huge amount of change that needs to happen on the back end just to facilitate this front end change. The technology and the culture have to change. So Rudy, before we start diving into what these exciting segments are of where banks can personalize, I'm intrigued to kind of get your perspective and maybe find out what the drivers for this change have been. Why are customers now demanding this?
Mm-hmm. But before I go there, just to add to what Ramzi has said, and he was highlighting rightly so the technical challenges as well that the banks have, but some arguments that we hear in addition to that from banks, why it's so difficult to introduce new innovative services is the regulation is so extremely strict, right? That certain services cannot be provided. That's one thing. Yeah. Data privacy concerns, limiting the use of personal data and financial transaction data for personalization is another one. And then we must not forget, I mean, there are concerns regarding the reputational risk for a traditional bank. Now addressing new customer groups, maybe with a personalized offering. There are concerns also regarding the profitability when looking for new revenue streams based on customer demand. And so all of these different stakeholder expectations have to be aligned. and the executive management support needs to be secured in these large organizations. And you hear the argument that we are a bank, right? We're not a consumer app. And that being said, many banks have realized the need for change. And meanwhile, there are traditional banks out there that even change their communication. For example, a Spanish bank has launched an app advertised as more than a finance app. They say it's a space for an open community for technology, the arts, music, events, gaming, and travel, wow. And also for financial products, right? So it's actually turning that value proposition maybe not around, but it's really opening up a whole new way of communication. Yeah. And I think it's so we see clearly that the issue is being slowly but surely addressed. So, and what is driving this change is it's clearly, as Ramzi has mentioned, the customer expectation. So fintechs have entered the game for sure, but it's also that the customer now wants instant gratification, immediacy, flexibility, openness to more investment options. And then the request for sustainability is an important one, and the one for global support for people that travel internationally, for example. And so the fintechs have entered the game, and they've started to address this. And yes, they do not have a legacy to deal with, with all these issues that I've mentioned before that are relevant for the traditional banks. And then on top of that, you have new technology available that's also driving change. Artificial intelligence, virtual reality, machine learning, big data analytics, even advanced anticipation models like the streaming providers are using today. All of this you can build into the platform to provide completely new services that add value for the customer.
I mean, it's such an exciting time to be in, but the banks are still, I mean, I wouldn't say hamstrung, because the reason why we go to banks is because we trust them. We know they're going to follow regulations. Like you were mentioning, Rudiger, that's why they are slow. But we are starting to see this change, this culture change, this thirst for moving along, despite the regulatory kind of hamstrings. It's going to be very exciting going forward. Now, I would think it's fair to say that other industries have catered to different people's lifestyles for a number of years, while banking hasn't, and we've discussed why that is. But as a result, as a consumer, it's often quite difficult to imagine, what can my bank personalize for me? You guys have brought up this brilliant notion, Rudiger. I think you said, obviously being able to have one app where you can have the arts, your finances, video gaming, all in one place. And that opens up so many different avenues to me. But maybe, Ramzi, if I could come to you, what are these different segments? You mentioned faith earlier in the conversation. What are these different segments of personalization you see institutions taking away with them in the future?
Yeah, so this is something that's very relevant in the context of the report that we produced that I mentioned alongside MasterCard and the Payments Association. And we looked into all these different segments, and the key ones that we found was around sustainability, as Rudy mentioned. There's a lot of new providers and solutions emerging focused on connecting finance and the sustainable movement and the sustainability movement, which includes ourselves as a provider of carbon tracking and offsetting solutions, eco cards, etc. There are providers focused on ethnic minority communities. Particularly, we're seeing this in the US, like players like Greenwood, McAfee, and First Boulevard. For example, Greenwood had managed to get 500,000 signups before even launching. And has managed to create a really strong movement around Black and Latino communities and how to connect those communities with a dedicated financial services provider. Wow. There's providers dedicated to the LGBT community like Daylight in the US, or the elderly like Sipstar and Calgera. And as you mentioned, Faith, which are for ourselves, for example, we're able to provide Sharia compliant and faith compliant financial products. So broadly speaking, there's a lot emerging for specific communities and specific segments, and I'm sure these will expand. And we're actually seeing, a lot of the existing players, whether it's the suppliers like GND or your other providers, your issuers, your processors, your card schemes, all getting behind these shifts and these movements and trying to support the development of these solutions.
Definitely, and I want to hone in on that before we start talking about all the fancy new fintechs, and that we're seeing emerge. Let's continue on the kind of traditional theme here. And Rudiger, if I could come to you and find out, how does G&D get involved with these institutions and enable them to start getting access to this hyper-personalized banking that maybe some of the non-legacy providers can already jump into?
Mm-hmm. Well, we discuss a lot about the future of banks and the future of payment, of course, with our customers. And that discussion has even intensified over the past couple of months, I would say. And the areas of development that we're looking into together with our customers are, for example, sustainability. So what can we do to go beyond the goals, for example, that we as G&D have set for 2030 and 2040, and how can we help our customers with their sustainability program and strategy that they're running.
Yeah.
The other one is inclusion. So an app assisting when paying at a point of sale, biometric cards or Braille companion cards for visually impaired users, for example, or kiosks for instant card issuance to the formerly unbanked in rural areas, far away from branches. It's another one. Then what's very dear to my heart, the digital customer experience, all the way up to, in the future, then banking in the metaverse. And we talked about it. Hopefully it's not Second Life Reloaded, but it's just really adding value and is based on new technology that will be developed and brought to the market. Yeah. And then coming back to my example with the Spanish bank, super apps. So competition from big techs and the role of banks, infrastructure providers. Will banks become infrastructure providers basically, or will they be the brand in front of the customer? So that's a very important decision on what role they want to take in the future, and depending on that, we will support them with different solutions than on our end.
Very interesting.
Finally, central bank digital currency and the role and the roles and business models of the stakeholders in this new ecosystem that's shaping up, especially for commercial banks and fintechs. That's one that is very interesting for us to discuss, because we have the connection to the central banks because of our banknote business, and they're now looking into how to digitalize this. And finally, to work with that technology to create value, working in our labs, working in our R&D together with our customers to see, okay, how can we actually integrate biometrics into certain solutions? How can we implement AI even in our production processes? So these are all things that we're discussing currently, and where we're developing solutions together with our customers.
Well, I think that the breadth of technological change there really underpins just how difficult this must be for some of the traditional institutions. But then also, it's interesting that you bring up this notion of banks even offering up, rather than being brands, offering up the technology themselves. For instance, we've seen Starling Bank look to actually become a software as a service provider rather than just a straightforward bank when it comes to their European regulations. So it's obviously a dynamic that's being asked of organizations of every shape and size in finance. Now, really, you've spoken to our audience about how you've been helping in all these various different segments, but I think one that's quite important during this summer, and one that I know that's very close to your heart, is also differentiating when it comes to sustainability. Now, we've talked about the regulations earlier on in the conversation and how that is holding some of the banks back. But actually, these regulations coming from the UN and the EU sustainability side of things are actually offering up a way for institutions to differentiate themselves in the future. How is G&D helping them do that?
Yeah, I mean, of course, regulators are pushing for sustainability, but in my view, banks and fintechs need to go beyond what the regulators ask from them in order to meet and exceed the expectations of their clients. And G&D's approach is, let's start with our own company. So we have set ourselves the goal to reduce our water consumption, for example, by 10%, and reach zero waste to landfill by 2030. And then by 2040 to bring down greenhouse gas emissions for the whole company to net zero and achieve 75% of the company revenue based on green products. Green for us means in line with our water, CO2 and waste targets. And to contribute to this, we've made a pledge to replace all virgin plastic in our payment card products latest by 2030 with recycled, industrial, compostable, or biodegradable materials. And that was just announced last week.
Amazing. I mean, that's not far away, so congratulations.
Absolutely, and we say latest by 2030. So we're looking at ways already how we can accelerate this. And again, it also very much depends on the cooperation with our customers, looking at their timelines and so on and so forth. And we've introduced these eco-innovative materials and adjusted the processes for payment card production already over the past couple of years. And we see these Convigo Beyond cards, as we call them, as a symbol of change, but we do not stop there, of course, because at G&D we combine this with digital solutions from our partners, Teconomy and Patch. Teconomy, who is also a partner of Algebra, helps consumers calculate their carbon and water footprint automatically in the banking app, and that in real time based on the purchasing transactions that the consumer makes. And Patch is offering consumers then a seamless way to offset the still unavoidable carbon emissions generated by their daily consumption or activity through impactful carbon removal projects. And then these are of course initiatives that we will develop further. Then, for example, we're looking at the recycling of our card products and so on and so forth.
Yeah, I mean, it's absolutely fascinating that not only is finance now reducing its carbon footprint, you at G&D are actually enabling ways to make customers reduce their outgoings even further and help the net reduction of it. I think it's just absolutely fascinating, and it shows the ubiquity of how finance is everywhere, from cards to just making a payment in general, to buying an airline flight. Being able to have that increased visibility due to partners like G&D is going to change the world. Every level counts. Now, we've heard some absolutely fascinating use cases of personalized banking from some of the traditional institutions. We've admitted that it's maybe been a bit slow to start, but it looks like we're certainly going to start seeing results yielded very soon. Ramzi, let's look into the kind of more smaller fintech scene. Can you tell us some exciting use cases that really stuck out to you as a fintech that jumped out and said, we are hyper-personalized into this only, and they've done really well? And maybe as well, tell us a bit more about what Algebra's been working on.
Yeah, of course. So as mentioned before, there's a lot going on in different segments of the market around hyper-personalization, around those key segments, whether it's faith, sustainability, the LGBT community, ethnic minorities, and beyond. And there are a few different key components of how these solutions are going about it. One of them is inclusive design, in terms of how the products are built. This means, as Rudy mentioned, having a little indent on the card to enable people who have, seeing and hearing disabilities to, put the card in the correct position. Yeah. It means having audio for people who can't see on the app. It means designing products in a way that considers behavioral science and considers how customers interact with their apps. Financial education and financial wellness is a key component within this, and it's been a repeated piece of the puzzle when we've looked into the space. How do these providers educate their customers around how to improve their financial well-being and how to navigate their finances? And then there's a component around how do you engage these customers, as well as in terms of the way that you've built your architecture and the way that the products are built. So from a faith perspective, for example, ensuring that, when your accounts, when you hold money and funds are deposited into accounts, those funds are never custodied in a way or manner that contradicts the values that are being suggested, investing in things like arms, gambling, alcohol, tobacco, and beyond. These are important components, ensuring that suppliers are agreeing to these. For example, us at Algebra, we have all of our suppliers have agreed to a policy around ethics and sustainability, ensuring that none of the funds are ever custodied in a manner that has a negative externality on society. and those things that are mentioned are naturally a part of the way that we're building our solutions as well. So yeah, that's broadly some of the things that we've seen so far.
I mean, by the very nature of it, catering to everyone's personal goals, their personalized way that they want to operate in this world, it really does highlight just the breadth of scope that you have to cater to, whether it be not wanting any of the kind of funds that you invest in going to anything to do with fossil fuels, all the way down to improving inclusion. It's just so broad sweeping. So it's amazing that you guys can come up with all these ideas. Now, with that in mind then, when we're going to start seeing, and I'm only asking this question because I want to temper the conversation and maybe see is there any kind of negatives to this change in the way that a financial institution's role in society will be. If every financial institution is having to offer up a kind of hyper-personalized approach, are we going to see a limit to scale? We've seen some fintechs try and expand across borders and kind of struggle with that move. Is that down to the hyper-personalization of a fintech, or is it just due to the complexities of finance that have kind of been troublesome for the traditional institutions? Rudiger, if I come to you first.
First of all, I think that there's nothing wrong with what others might call niche markets, right? So you can scale up to the tens of millions, for example, in a niche market in countries like the US or India, for example. And we're seeing this in our customer base. And it can actually be a better model to be a leader in the niche with a devoted followership than trying to be all things to all people, and as a result becoming unattractive and irrelevant to many clients. And I like to compare this actually with what's going on in the political scene across many European countries. We see more of a fragmentation to smaller parties now and movements that certain parts of the population can identify with. And maybe there is really similarity to what is going on in the banking space. And again, it's all about that focus. And some banks have addressed this with second or third brands, maybe even to cater to a specific target group and still keeping their overall holding together, so to speak.
Yeah.
But I think this is the secret of the success of so many fintechs actually in their local markets and then going global, that they have this focus and that they are concentrating on a certain target group.
Absolutely fascinating. And I mean, I throw it in there really just to kind of provide some grounding, some kind of other side. But I think you're right, and especially when for a lot of organizations, it's not a niche market. The niche market is inclusivity, which in itself is it's an opposite. So having more people involved in banking, there's such a huge underbanked population. There's even bigger non-banked population. To be able to start catering to those people is going to be very exciting. Now, prediction time, guys, as we come to time. Crystal ball's out. We're going to see consumers actively search out for a bank in the future. How long do we get to that point? Ramzi, if I could come to you, are we actually already there, really?
It's a good question, and I know we discussed in past this idea around banks becoming brands, and I think it's a very important point, an interesting point around the way in which consumer culture is evolving, and the need for hype and a brand to be built around something for it to engage younger customers, as well as the utility, and I do think that people are going to be searching out for things that resonate with institutions that resonate with them, whether it's their favorite influencers or their favorite actors or sports players and who they're using and how they're using it, or whether it's in terms of okay, what am I specifically looking for? Is it lending products, or is it investment solutions, which is a huge point, or crypto and DeFi and all of these different areas, which financial institutions are able to offer the suite of services or the individual services that customers are looking for. Each of these are very important components, and I do think people are moving in that direction, and there is a huge demand for it. For example, in certain key communities as well, when we talk about the values component and the ethics component, people are actively searching for something that is more ethical, something that is more inclusive, that is correlate with their faith or does correlate with sustainability. Our market research found this, extremely clearly. 60% of customers willing to move to a more ethical financial institution provider.
Wow.
Given the fact they know how the market operates and what the existing institutions are doing, and it's no longer sustainable to be taking this approach. So I do think there is a movement in that direction. It might take a time for it to be as active as we might want it, but it's definitely happening.
It's brilliant to hear, and that 60% is so exciting, because it does show that the needle is changing, the word is getting out there, and Rudiger, I've also got to get your perspective as well. Are we at that point already? I mean, Ramsey's saying we're at 60%. How do we take it to that 100%?
Yeah, it definitely. I think the consumers are actively searching and picking their bank depending on their needs, and they're discussing them like products already, from my perspective. So, and some banks are even enforcing this, creating communities to participate in this discussion. And in my view, the concept of a home bank, also as Ramsey mentioned before, is no longer valid. So today I have a financial partner for my mortgage, one for crypto trading, one for long-term sustainable investment, for the car loan, and so on and so forth. And then we can speculate whether this will all be brought together again with the super app that is then making sure that all of these services are merging. But in terms of the expectation, clearly of the customer, there's also some interesting studies on this. Like what do consumers expect from brands, for example, and then you can relate that to the financial sector. For example, there's a McKinsey study where they've been asking consumers about what their expectations are, and they said, tailor messages to my needs, send me timely communication tied to key moments, engage and onboard me when I buy the first time, celebrate my milestones. Those were all in the top 10 answers. And why would a consumer not expect the same retail level of personalization from a bank these days? So therefore, it's sure that the expectations are there. And as we said, the traditional banks have understood that there is a gap and that they need to change, and they need to overcome the challenges that I mentioned before. And I think really they should leverage the trust in traditional banks and combine this with customer orientation and agility and technology as well.
Absolutely amazing. It does seem like a massive four-pronged approach to really get it over the line. You've got to change the culture, the technology, but the customer demand is there. And I think it might be fair to say that the institution that doesn't look to become a brand in this sense will go the way of the dinosaurs.
If I may as well.
Yeah.
I also think there's a very interesting point around the way in the interaction between the existing institutions and the emerging fintechs as an area for development and a way in which the industry is going to move, whether it's in terms of the larger financial institutions and banks providing the balance sheets for lending solutions in this movement towards limiting the banking licenses that are issued and the requirements for capital that are required to offer those kinds of products and services, or the counterpoint of technology providers and fintechs providing the solutions to enable larger institutions to have the necessary products and services and technology architecture that they want. Yeah. Or whether it's the interaction between all of the different players and the different components within the payment cycle, your card schemes, your card processors, your issuers, your bureaus, all of these different players. How do they interact and how do they enable these movements towards certain segments and towards certain requirements that customers are expecting? Sustainability is the first one, and there's been a lot of activity there. But from our perspective, there's a lot more to happen as well. And there's a lot more interest that needs to be done across the board on the S of the ESG, the social side and beyond. And that's where I think we're going to get to in the next phase as well.
Definitely. When you look at ESG, the environment hits first, and then S&G sometimes go by the wayside. So it'll be very exciting to see how that is going to develop in the future. And I know that both of you are really spearheading some of these changes and are a massive force for good in this industry. So I want to say a big thank you for you both joining us on today's Virtual Arena. It's been, I always love having use cases on the show because it gets me excited knowing that we are actually working towards something. It's not just buzzword bingo. So thank you both. I hope you've enjoyed yourselves too.
Thank you very much.
Thank you.
Amazing. And also a big thanks to our viewers as well. You can of course catch the rest of the series and much more over at ffnews.com and of course YouTube, but especially LinkedIn where you'll see me in the comments. Say hi. Guys, thank you so much for joining. Have a great day and goodbye.